Welcome everyone to Vested Interest. This is Shane back again for another stock pick of the day. It is March 21st. Today we are going to take a look at Hormel Foods. Let's jump right into the video. Hormel Foods. Hormel Foods is a Fortune 500 company that manufactures and markets high quality brand name food and meat products globally. While we are over 130 years old, we are just getting started. So another one that has weathered the storm, been around since all of the turmoil in the markets, Great Recession, Great Depression, two world wars, Vietnam War, North Korean War, oil wars in the 80s, 70s. I believe was really the oil wars in the 80s was the first housing issue. Inflation was very high. I was talking to my dad here a while back whenever I bought my first house. I mean, a while back, it's been 20 years ago now, back in 2003. And when I bought that house, my interest rate was about 7%, 6.8, I believe, right in there. And everyone was talking about how in the 80s and even into the late 90s, it was in the teens and higher. So it's all about perspective. So they've seen all those come out the other side. I think they will bear this one as well. And as you can see, you're probably familiar with some of their products, right? Hormel products in general. Chi-Chi's, this was an old restaurant here in Michigan anyway, but they do have some salsa they still make. The restaurant brand is no longer, or restaurant chain is no longer there. Dinny Moore, Hormel chili, some chicken breast, pepperoni. My kids eat the Hormel pepperoni, Skippy, Spam, Stag chili. So like I said, a lot of Genio. A lot of these you're probably familiar with, even if you weren't aware that they are Mbasa. I know it's another corn nuts. I know a lot of people like that. So go ahead and pause this and take a look at all the different brands. Like I said, you're probably familiar with quite a few of them. Didn't even realize they were Hormel Foods, under the Hormel Foods umbrella. If you want to know more about them, check them out, www.hormelfoods.com. That is their homepage where I pulled this information from. Now, the reason we were taking a look at them, they were down on the day, 0.64%, not a huge drop, but they did close out the day $38.51. We are talking about Hormel Foods Corporation's ticker HRL, out of the consumer staple sector. 52-week range as low as $38.22, as high as $51.11, so right up against that 52-week low. Average volume 1.8 million. Today's was 2.2, and pretty much just a sell-off. A little bit of recovery at some points, but from start to finish, a sell-off. Maybe a little recovery at the end of the day. Actually, their low point, what looks like it was around 2 o'clock there, maybe 1 o'clock, 2 o'clock, somewhere in there. Market cap 21.492 billion, a beta of 0.17. So they are really a lot less volatile than the overall market. Low volatility on this one. So if you're looking for something with a real low volatility, this would be one to take a look at. PE ratio, in my opinion, is a little high. Even though they're up against their 52-week low, I would like to see this back down into the 15, 16 range. Again, a company that's been around for that long, and even though they have some familiar brands, I don't know how many people are jumping into the Hormel food brands that aren't already buying their brands. But you never know. I'd look at their potential growth or future outlook if I was interested in this company. Earnings per share, EPS, $1.78, not terrible. Next earnings date is sometime between May 31st and June 5th. Forward dividend is $1.10. They are paid out quarterly. We'll see that here in a little bit. And they have a nice dividend yield, 2.87%. Last ex-dividend date was January 13th. I'm assuming they've already paid out that dividend, and depending on what their next ex-dividend date, we'll see that here in a moment as well. You may not get the next dividend if you bought them now, but again, we'll take a look at that here in a moment. And according to Yahoo Finance, where I pulled this information, they have a one-year target estimate for the stock price of $43.24. Now, some other information on this page I always recommend you take a look at. Go into the financials. Quite a bit of information in there. Revenue, debt. You want to look at all that. Some of the things I like to look at under financials is this one down here, free cash flow. They pay the dividends out of free cash flow, so you really want to see growing free cash flow over time to cover a growing dividend. So as you can see here, 2019, 629 million, 2020, 760, a little bit of growth here from 20 to 21, 769, and from 21 to 22, 856. So they are growing over time, right? And to date, 688 million so far this year. So I'm assuming they're going to beat last year's as well. So nice to see growing dividend. Another one I like to look at is repurchase of stock. And they have been repurchasing stock 19, 2020, 2021. They did not repurchase anyone, but they are not diluting you. So at least at a minimum, they are keeping the stock count the same here, right? You don't want to be diluted as a stockholder. That basically means as they add more shares into the pot, you own less of the business versus as they are buying more shares out of the pot, you own more of the business, right? And you want to own more of the business over time, whether it's by them repurchasing stock or whether it's you buying more stock, right? Preferably both. And then another one I like to look at is the statistics. This gives you a high level overlook of whether the company may be undervalued or overvalued based on dividend yield theory. You look at the 5-year dividend average. Again, found under statistics down at the bottom. A lot of other information in this one, price to book, price to earnings, some other information in statistics you want to look at as well. But this is one I like to look at just for a quick high level. Is this company potentially undervalued? Look at the 5-year average. If the forward dividend or the current dividend, right, yield is higher than the 5-year average, the stock is potentially, or company is potentially undervalued. If it's lower, so right, it's higher now, so it's potentially undervalued according to the dividend yield theory. If it was lower, then it would be overvalued, right? If this was a 1.99 for the 5-year average, which it is, and let's say it was at a 1.7, that would mean it would be potentially overvalued currently. But with it being above the 1.99, significantly above, this speaks to some potential undervaluation. Now, I always recommend more than one source. So another source I like is stockanalysis.com. I'm not affiliated with stockanalysis.com either, just another one that I like to look at. They've had 20 stock analysts take a look at this. They call it a consensus hold, and it's actually pretty close to a sell. So there may be some other information here you want to look at. Maybe their future growth potential isn't all that good. Maybe they have an earnings report coming up that is not going to be favorable, or people are projecting that may not be favorable. So might want to look at some more information here. Low estimate of $35.35. So they see it potentially setting a new 52-week low, right? And that would be an 8.21% decline, because it's right up against 38 and some change is what the 52-week low is. So if it drops to 35, it's going to set a new 52-week low. That, in my opinion, might be a better time to buy this. If you can get it cheaper, again, bring that price to earnings down into the teens, 13, 14, 15 range. I would be much more comfortable with this company in that range. Average estimate is $44.10. That would be a 14.52% increase in the stock price from where it currently sits. And if it happened to hit their high of $51.35, that would be a 33.34% increase in the stock price. All the while, you could collect that 2.8% dividend yield, at least what it currently is. If you got them cheaper, obviously it would be higher. Now, another one I like to look at on this page, beyond the dividends, which we'll see here in a moment, is statistics. Again, and I like to go down and look at the return on equity, ROE, and return on invested capital, right? I'm looking for double digits here. I'm looking for 10% or greater on both. As you can see, their return on equity is 13.10%, very nice, and their return on invested capital is 17.50. So I like both of those numbers. That looks very nice, especially for this type of company. Very high return on invested capital. So nice to see that. That is a positive. Now, we talked about they are a quarterly payer. They do pay out 27 cents per share and half a penny, really, right? That's what that is, way over here in the third column. We don't have half pennies anymore. Back in the day, they did. You look that up online if you want to see what a half a penny looked like, but they did have them back in the day. Now they're talking about getting rid of pennies because they're too expensive to make them. Cost more than a penny to make a penny, right? That's kind of funny to say, but that's the truth. And they did pay out February 15th. So if you bought them now, you have passed that last payout date, so you would be in line for the next payout period here for this dividend. Has a 58.6% payout ratio, which I like anything under 75%, and dividend growth of 6.03%. So there are, it's not looking bad, but again, I would maybe see if it pulls back further. It's on the decline. It looks like maybe this one might be one. If it sets a new 52-week low, let it settle out a little bit, see if it drops down into the low 30s. That would be where I would look at it. Maybe $32 and under is where I might be interested in this one. And maybe it never gets there, right? And that's all right. There's thousands of stocks to choose from. You don't have to be in every one. Well, these are quick hitters, trying to get them in under 10 minutes, trying to find value in this market. As companies pull back, we like to take a look at them to see if they are presenting value. This one, in my opinion, low 30s would be, 32, maybe even $33, 32 and some change. I'd be interested, but currently I'm passing on this one. I have some other positions in my portfolio I'm trying to build out. But again, everything I saw on it, dividend yield, other than the price to earnings, is a little high. I like under 18%, unless it's a tech company or something that's growing fast, then I want something down in the teens, right? So lower the better even. Hell, if it's in the single digits, that's really where I like it. Well, as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up. ring the notification bell. Most importantly, subscribe to the button. Hit that subscribe button down there. Help me out with the YouTube algorithm. It really helps me whenever you hit the notification bell, hit the thumbs up, and drop a comment. Let me know what you think of the videos. Let me know what you think of Hormel Foods. Is it in your portfolio? Do you use some of their brands? I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. If there are stocks you want me to cover, companies you want me to cover, go ahead and drop them down below, and I will try to work them into the rotation. Well, this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Hope you have a great week, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can't lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and selected criteria, or seek the advice and counsel of a certified financial advisor.